Hello, today is August 19th, Friday. It's 4:47 just after the close. The title of this episode is Stock Market Bulls Remain in Control Yet Vulnerable. And this is your weekend report. Hi, this is Jonathan Gurney, Portfolio Manager at Gurney Financial. This post is for informational use only. The views expressed are those of the author Jonathan M. Gurney. This material is not intended to be relied upon as a forecast, research, or investment advice and is not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. In short, this is to tell my clients what the game plan is, how we traded throughout the week, and to be open and honest about the things we did well and the things that we didn't do well. In fact, this week we added a new rule to the trading strategy. Boy, were the last few weeks difficult to deal with. Some historical stuff occurred and we changed some rules. So we're going to switch gears, change screens, and hopefully we can keep this right around 10 minutes for you. Okay, here is the performance for the week. As you can see, it was a red week, but we've had a fantastic rally in the S&P 500 and many other locations. It was an all-out rally. As you may recall, the end of July, I was like, hey, I want to really position for this. However, you don't expect 6 or 7 gaps up. That is very difficult to deal with. In fact, I had a rule before this that said, anytime you have 3 gaps in a row up, a gap up means movement overnight, a really nice move overnight. And a lot of these times it gapped up and rallied after that. Very difficult to trade. I do understand that most of the moves do happen over the night, over the nighttime session, and that it can be difficult to deal with. But that was heartbreaking. I was beating the index by 20% about 3 weeks ago, and because I was positioned short, and it put me in a difficult position. So I wanted to participate. Some new rules were implemented, and the first rule is this. Let me show performance, and we'll get into the new rule. But overall, the S&P 500 was down about 1.21%. As you can see here, sectors were also ugly this week as expected. What do you usually see sectors do well during down or consolidation weeks? You usually see the healthcares, the energy. None of this surprised me. This is normally what tends to do well, the areas that tend to do well sector-wise during downfalls or consolidation, which is really what this is at this point. Bulls are in control. We did lose the 5-day moving average, which is not a good thing short-term. However, 4,200 is the breakout level. If we go below there, problems, okay? So as you can see here, intraday for, I'm going to update this, intraday for these stocks was not pretty. What was the one stock that did well? The top 10 big boys, healthcare. So those tend to be areas that do okay. It's difficult to pick those at the time, but you can see not a good week. What was the only area that did well for the week in these stocks? UNH, which is a healthcare company. So overall, you can see we had some consolidation. So let's go through the chart overall, okay? The overall chart, number one, you can see all these gaps since the end of July and into August. All these gaps up absolutely killed me. And I should have done better, no doubt about it. I should have shifted gears as we were trending above the 5-day moving average, which is usually my rule, follow the 5-day moving average. The new rule is this. You are not allowed to short when the trend is up in the 5-day moving average. You can short, but you cannot be short for more than a day unless the trend starts going down. And the 5-day moving average as of yesterday started to trend down, and today definitely trended down. The uptrend line is this blue line right here. So we are still right at it, actually below it. We finally tested one gap. That's all we've tested. I am a bit concerned that we have a lot of testing to do, but at this point, bulls are still in control. The short-term trend is down because the 5-day moving average, which is this orange line, is sloping down. So we have lost the trend. However, would it surprise you if finally we get a decent dip here? Would it really surprise you if bulls came in and killed shorts again? Would not surprise me if you get a bounce. And so the things that I'm looking for as I shift to this chart, I want to see the S&P 500 get above 42.57. Right back here, which is the 5-day moving average, and needs to get there fast. If not, I'm afraid this can unravel with all of the gaps up that we have. So overall, bulls are in control. I am currently in cash. We did have a positive week this week. It was actually a good week of trading, but it was very difficult. It was choppy, up and down, big moves. You can see the first 2 days, I'm like, this is not good risk reward. The S&P 500 was overbought. I'm going to have to show that to you on a different chart. But overall, the RSI was over 70 short-term and long-term. Not good risk reward. It does go a little bit higher. We tested the 200-day moving average to the cent, this red line, which is a huge trend line for many people. It is important. We tested it and struggled from there. I actually shorted that, but the problem was I had to get out of the position because the next day it came roaring back. So overall, we did okay this week. Nothing to brag about, but I basically said this day I was long, and if it goes below a certain level, I'm out. And I was saying no green to red, so no going negative on a position. So I got good entries. Even today I went short, but it got close to a level and I said, nope, I'm out. I'm going to have a positive week this week. So good protection. Difficult to beat the market on a week like this, especially when you're getting price action like this. You can see the up and down movement. So Monday, Tuesday, Wednesday, Thursday, Monday, Tuesday, Wednesday, Thursday, Friday, right here. So it was tricky week. But overall, patience did pay off this week. So overall, the things that I was expecting at the end of July, I want to see the VIX get to 19. I want to see the put-call ratio get to near 40. Both those things ended up happening. The most frustrating part is I missed most of it because I was basically, when I get 3 gaps up, I had a rule that basically said go to cash, because the risk reward of going that high without testing is not good. And this was the first real test that we saw a gap beyond here. Okay, so there's a lot of gaps below, which really concerns me. With that said, short term, I'll show it to you. Here is a setup that I actually really like, and this is why I went to cash. Yesterday, this was the setup. It's called a triangle. We were in a triangle for over a week. When this happens, you're set up for a big move. I don't know which direction it's going to go, but this led to a pretty decent move down. Doesn't mean it always goes down. In fact, recently this has gone up, or a lot of these times it has gone up. So overall, the risk reward was just not good. Interestingly enough, what happened? The move happened overnight. So retail protected. I personally don't think it had anything to do with options expiration. That's just my opinion. If you need a catalyst, there you go. But I think the risk reward was bad, and the market wanted to test 4,200, and I think it will test 4,200. Right now we're at a critical level. It basically went sideways most of the day at 42.25. And if we lose that, which it is very weak now, that level, 42.25, 4,200 could come quick, which is the breakout level. Right here is the breakout level. So overall, I think we got to be really cautious and be tactical throughout this, as I always will be. So overall, you can see here's the QQQ, which is important to pay attention to as well. You can see we hit overbought twice and took a breather. So the MACD is crossing over. So some reasons to be cautious, but on the other hand, being non-biased is very important. I think to show you, I went long at a time, I went short at a time this week. You don't have to have a bias to do well in the market. for those that want to be bullish and remain optimistic, here you go. Last week, the S&P 500 recovered. I'm going to take this chart down so you can see it. Sorry. There we go. Last week, this is Ryan Dietrich. He puts out some great stuff. Follow him on Twitter. Last week, the S&P 500 recovered half of the bear market losses. This is a very good sign, as stocks have never in history moved back to new lows after this happened. In fact, a year later, higher every time and up 19.3% on average. So you can see here, good things happen in time. And I do believe this will happen, but it does not mean that, in my opinion, this is a year where we would have a year that breaks a new rule. And this, I do wonder if we need to test a new low. I'm not being bearish. I will trade price. But once I saw this, it was like the market saying, well, here we go. We're going to break that rule too. But at the same time, it would not surprise me to see these gains, even if we did hit a new low this year. So I'm just being honest with you. Good things are ahead. But it does not, in my opinion, mean we don't test 45 something or 3,500-ish in the S&P 500. I'm not bearish. I'm just being realistic to say it would not be surprising to test some of these gaps given the environment. The Fed has put a lot of money in the system. But overall, the market is too bearish right now. And so what happens when the market is too bearish? You get gains like this because institutions, our hedge funds, are still largely short positioned, and that's how you get a year like 2021. Let me make this very clear. The news, the headlines, the economics are really not any better than they've been a month ago. Seasonality and short positioning is what, in my opinion, has moved this market. And I'm not being negative because I missed the move. I honestly said that. And I'm very frustrated about that, especially since I called and thought this would happen. But new rules implemented, you learn from it. Look forward to implementing that new rule in the future. But overall, I think good things are ahead. But you just got to be careful. Also, paying attention to the VIX. We are writing this channel. There's nothing really negative about this. So right now, we are still, in my opinion, the bulls are still in control until you lose 4,200. You lose 4,200, this gets pretty ugly quick, in my opinion. Again, it doesn't mean that every day is going to go down. Like, you're still going to have up, down, just like this entire trend. But what happened in an uptrend? What I said in my article that I'm sending to clients is basically the 5-day moving average is your trend. Don't fight it no matter what the news is. It's very, very difficult to shut that out. But my new rule is basically anytime the 5-day moving average is trending up, do not short it. We finally got a trending down. It's been a long time since we've had that. Since the beginning of July, we got close to a downtrending 5-day moving average, which is this orange line. We finally just got it after a solid month, basically the middle of July to August. So overall, I think it's good that you're seeing that I'm very non-biased. I'm happy to go along here. In fact, I'd be surprised if we don't potentially test the 200 moving average in the short term. However, I would love to see eventually, it doesn't matter whether it's this year, next year, or 3 years from now, these gaps are going to get tested. I don't know when that happens, but right now, bulls are still in control, even though it's kind of an ugly week. So the trend line was broken, but I think people are positioned so short, people might come in and buy this. But overall, after the bell, I do believe we started going lower. Yes, we did. We started going lower. So that does not surprise me. I'm just glad to have a positive week and take gains while they were there during a very difficult week. So this was a week of consolidation. You have rallies like this. This is historical stuff. Nothing surprising, but it is historical stuff with that many gaps. So if that happens, I'm not going to chase it. I'm going to continue to play and trade good risk reward trades. This is not a horrible entry at the 4,200 level. We lose that though, you have problems. So overall, not a bad week. I'm not happy about this, as you can imagine. So I was beating the S&P 500 3 weeks ago by 20%. So this is not fun. I have a new rule. It'll resolve this. I will make this up, but that was hard. That was tough. We were in very good position, beating by 20% and starting to position long, and just did not expect us to have 6 to 7 gaps up over a month period. When the trend is up, don't fight it. That is the summary. So you learn from it, you move on. But thanks for your trust. We'll continue to improve, and look forward to some good opportunities next week. So have a good weekend. See you guys. Bye.